Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a happy first day. But in fact, actually, it's not just a Tixee Live, is it? It's a Tixee Live watch-along, of course, of the ECB Interest Rate Decision. So yes, it's a watch-along of, a much anticipated financial event or economic indicator. Oh, hello, Eric. Good to see you, my friend. I hope you're well. So yeah, we're going to have a little talk about it because it's due in about 5 minutes. But before we get into that, of course, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So indeed, yes, like I said, this is a Tixee Live watch along of the ECB interest rate decision. And the market has priced in a jumbo rate hike for the ECB, that is. They are anticipating that they are going to be doing a 75 basic point rate hike. Now, this is due, like I said, in about 4 minutes. And like I say, they're highly anticipated that they would move it to 75 to move the interest rate up to 1.5. However, even though we are anticipating this, and this is expected, don't forget several other central banks have surprised us when we've expected them to do 75. Bank of Canada did that yesterday. They were supposed to do 75, or the market anticipated they would do 75, but instead they did 50. Reserve Bank of Australia did the same. Everybody anticipated them doing a 75 basic point rate hike, but they only did 50. So is the ECB going to catch us off guard? Are they going to catch us off guard as well? Because they are doing a bit of a balancing act, okay? Because like everybody else, they are fighting huge inflation. You've got a huge inflation problem. And, there is a lot of concern still that though they have a warm autumn at the moment, winter is still coming. But those sort of fears they had earlier on is slowly disappearing because the gas storage is above seasonal levels. Okay, and we have got a warm autumn at the moment. And the fear of blackouts and rationing is no longer feared as much. It's not longer being talked about. I think that's still a bit of a mistake because I still think winter is coming. And even though we're having a warm autumn and we're not worrying about it at the moment, this is still something they may need to worry about. And here's the other thing. They have got signs of a slowing down economy, and it's greatly anticipated that the EU will fall into recession at some point, maybe by the winter. However, that 75 is expected. And Lagarde has hinted, that the rate cycle will end in February. So she's got a little bit of way to go. The most anticipation, they'll bring up interest rates to 3%. So they do 75 today, they're halfway there. So, the market's thinking they're going to do 75 today, 50 in December, maybe another 50 in January, and then 50 in February. But like I said before, the biggest problem she's got to do a balancing act. Yes, they've got to fight inflation. They've got to bring inflation down. But winter recession is on its way. They are going to fall into recession. And this is why I think, though this interest rate decision may not be the big market mover we're all hoping it be, or it could usually be, I think the press conference is key. And that happens 45 minutes later. Because this is it. Will Christine Lagarde finally admit that EU is on the edge of recession and say the dreaded R word? We'll say the dreaded R word. For now, the euro is enjoying parity. But anyway, let's quickly go through some scenarios because we've got about 30 seconds to go. Scenario number one, ECB raises rates by 75 basis points. It is priced in and the market shows little reaction. So scenario number two, the ECB surprises the market, raises by 50 basis points. The market's disappointed and the euro potentially comes under pressure. Scenario number three, ECB does the unthinkable, which I will be absolutely gobsmacked they did this, raised by 100 basis points and euro potentially gets a boost. And finally, number four, ECB raises rates by 75, makes a little bounce, but the press conference then puts pressure on it. So anyway, let's get ready for it. It's about to come. Maybe only 50. I wouldn't be surprised, buddy. I wouldn't be surprised. But anyway, it should be out any minute now. Let's have a look. Okay, very little reaction. This is the euro on a 30-minute chart. Let's have a look, see what it is. Have they surprised us? Clearly they haven't, because the market is hardly moving. a pip, is it? So obviously what we anticipated. Let's have a look. Yeah, indeed. By the looks of things, they've done exactly what we anticipated. Looks like they have done 75 and have indeed raised it. And that's why we got a slight look at that. It's priced in. It's priced in. Absolutely priced in. You see it testing that 200-day moving average now on a 30-minute there. Can it stay above parity? Is this going to be disappointing? Because we have priced it in. We've been anticipating this. So what we really wanted was a shocker, more than 75. That's what we really, really, really wanted. But they've done exactly what they said they're doing the tin. So like I say, bear in mind, that means we're halfway there to getting to the interest rate we think they want to get to, which is 3%. And we've only now got December, January, and February to do it in. So does that mean 50 in December and maybe 50 in January and February? 0.75. Yeah, I know, Eric. It's exactly as anticipated. Let's have a quick look actually at the euro sterling while we're at it. Disappointment's priced in. They needed to surprise the market. Realistically. This is what they needed to do. That's what they needed to do. But like I say, so yeah, anticipation next time, 50 next month, 50 in Jan and 50 in February to get to their target of 3. Let's have a quick look at the euro dollar again, see where we are with that. Yeah, again, priced in, which really basically means now it's all going to be about the press conference. Let's wait for the US. Yes, indeed. Well, this is the thing about the press conference, I think. Okay. This is what I think about the press conference. And I think you're right. Because if she starts talking, she has, talks about the current condition of the EU economy, it will sink in that the United States, like against like the UK, the United States is doing far better than everybody else at the moment. So, doing this little, bear in mind 75 is aggressive for the ECB, but by doing these little bite-sized pieces, when she does the press conference, reality is going to set in, but the US is miles ahead of everybody. They have still a very robust economy. So I mean, realistically, the only reason why the euro's had a bit of a boost and is above parity at the moment is because we have the anticipation of the Fed doing a pivot in the future, slowing down on their aggressive interest rates, but they can afford to be a little bit more aggressive. But there we go. Pretty much, like I say, as anticipated, scenario 1 priced in. That's the scenario 1 we said, wasn't it? So pretty much, obviously it's coming a little bit under pressure, but it's still keeping above parity for now. That's okay. I've got a girlfriend. Thank you. Amazing. Anywho. So yeah, here we go. I mean, who's going to be watching the press conference? I mean, I'd be watching the press conference. I'll see if I, because I think that's where the real fireworks are going to happen. Because Lagarde can be a teeny weeny bit dovish. She was a bit hawkish last time, which surprised me. She could be a little bit dovish. And let's see where she goes with that. And like I say, if she does say the R word, if she says the R word, she's going to be pushed on that. Because at the moment, obviously, the sort of market is sort of thinking, in general, like I say, this euro energy crisis has died down a bit now. Like I say, there's plenty in storage at the moment. In 13 minutes? Oh yes, of course. Yeah, US CPI is coming out in a minute. Very good point. 2.4 anticipation is anticipation for that. That's a very good point, Eric. We've got the CPI coming up as well. Obviously, this has sort of overshadowed it, and I think the press conference will overshadow it a bit as well. But that's a real valid point, Eric. Yes, we've still got the CPI to come. Very much so. Very much so. Less than 13 minutes, in fact. In 10 minutes, we have the US CPI. Yeah, 2.4, because it was minus 0.6 last time. So now they think it's going to be 2.4%. It will be interesting. Like I said, compared to Europe, compared to UK, the US has got a pretty robust economy at the moment. The beginning to show cracks, though. Don't forget, the beginning to show cracks. The other thing I wanted to mention, again, this is why I'm slightly disappointed. I wish the EU had been a little bit more aggressive. I know they've done 75 points back to back now, but don't forget, one of the big issues in the UK, in the US, and in Canada is there's a very big housing market. In the EU, not so much. Not so much a big housing market. So it obviously won't affect mortgage rates like it will do so much in the UK or the US or Canada, for example. Yeah, it would be interesting to see if they do, if it obviously boosts the dollar. I think it's analysed, isn't it? So I say we could see a little bit of action, but I think, it's all about the ECB and the press conference now. That's the thing. I think the bet really now is, look at it, is how long can the euro keep above parity? Keep above parity. It's funny because I was thinking about this the other day. I remember when, I can remember quite a long time ago now, well, it seems like a long time ago, that the euro was trading above 120, and the market panicked when it fell below the 120 mark. And like we said, we've been in parity. It's the first time it's been above parity since September the 20th, I think it is. So, yeah, anyway, we're testing that. That's interesting. We're testing the 200-day moving average now on the 30-minute. It's been holding for a bit, but there we go. See where the euro sterling is now. Euro sterling. Okay, we are seeing a lot of euro weakness now. Beginning to see euro weakness. There it goes. There it goes. And we're just above. We're going to go back below parity again. It was enjoying parity for a short time there, wasn't it? Bless it. Still holding though, just above that 200-day moving average. Yeah. So anyway, like I say, like we have got the US CPI coming out in 8 minutes. 8 minutes. So we could keep an eye on that there. Oh, here it goes. Ooh, just testing it again. Still above it a little bit there. Yeah. Let's have a look at the euro yen as well. That's going to be following suit, obviously. Ooh. Still just above parity. So yeah, so we've got the press conference. We got US CPI in 7 minutes, which would be worth watching. Don't forget, you can ask me questions anytime you wish, or share your opinions like Eric, which I really appreciate. Eric, it's always good to see you, buddy. It really is. I really appreciate it. Tell me what you think. I mean, do you think, what do you think we help with the press conference? Because like I say, the reason why we've seen the euro above parity, yes, okay, the 75 basic point was priced in, so it's anticipated. Buy the room and sell the facts slightly, but obviously, it was priced in on that. But at the same time, we've had a weak dollar. Will the CPI change that pivot hope, which has been driving it? You're welcome. Oh, mate, absolutely, Eric. I really, really appreciate it. I really do. It's always great having you on the show and chat away. I really do. Okie doke. Well, I'm going to get ready for the US CPI. This is due in 6 minutes. If there is no questions, don't forget, you can, if you think of a question later, you can put it in the comment section on Facebook or YouTube. I will see them and I will reply to it next time I go live on air. So don't forget that. You always have that option as well. So anyway, let's get ready for the US CPI. And and don't forget, also today we've got Amazon and Apple earnings report is coming out later today. So that's going to be really fascinating, especially Apple, I think. Especially Apple. Don't forget the drama we've had with Facebook and the disappointment we had with Google and Microsoft as well. I think that Apple, don't forget they hinted. They did hint that the demand for their latest flagship iPhone 14, was drying up slightly. So it'd be interesting to see their earnings. Definitely. I think it was good for the euro because we are in Europe and have to be strong against the dollar. So bad CPI is good for the euro too. Look, bad for the GDP, it would be bad. But, and I agree with you, the only way, because absolutely, totally, Eric, you're on the money. You're absolutely right. And one of the things which is punishing the market and punishing the other currencies is the strong US dollar. That's absolutely punishing everybody. It doesn't help that the EU's on the brink of recession. UK's probably in recession already. Excuse me. There is obviously general concern that the US is going to fall in recession by the beginning of second quarter or first quarter of 2023. So that's not helping. And obviously because that activates dollar's safe haven status as well. But yeah, it's the strong dollar. We need a weaker dollar, which will help out the euro and the stock market. And like I say, with the strong dollar as well, it impacted Microsoft's earnings as well, certainly for PC, because the PC market's drying up. So it does impact everybody, but impact the market and all the currencies in general. So you're absolutely right. But yeah, like I said, anyway, I'll be interested in Apple today and see if we're going to get a bit of a disappointment with that as well. Because it'd be interesting to see, especially as they dropped hints that the Apple the new iPhone 14 is not so much in heavy demand. And just guess what, guys and ladies and gents, even we got the euro now back under parity again. 0.99967. So it's still trying. It's hovering around that 200, slightly under it now. So it's back under parity again. So that lasted long. Let's see if it could bounce back, and let's see really if this press conference is going to be a nail in the coffin for it as well. And see that. Actually, we've got. Do you know what? We've got 2 minutes. We've got 2 minutes to the US CPI. Should we watch that as well? Should we keep an eye? Should we watch that? We've got basically 2 minutes to the US CPI. So we have a look at that. See how the dollar yen is under depression. Okay. Gapped forward. So wait. Look, we've got 2 minutes. We'll watch the US CPI as well. Why not? We'll do that together as well. Because that should be interesting. Because that's due literally now in just 2 minutes. 2 minutes, that is. So we'll watch that together as well, I think. Why not? Why not? Let's see where the euro is again. Okay. See if the sterling's getting ready for the US CPI. Let's keep an eye on the euro, though. There we go. That lasted long, didn't it? That lasted long. So, yeah, I see. I'm looking at my chat there. I got trolled. It's nice to know that they're paying attention. Nice. Very nice. So what do you reckon, though, Eric, about the CPI, my friend? Do you reckon it'll come in at 2.4 or slightly lower than that? Let's have a look. How long we got? We've got 1 minute, 10 seconds to the US CPI. So that should be quite interesting, quite fascinating. Let's watch this. Okie doke. You think lower? Well, it's a big jump, isn't it? Previously, it was negative 0.6 and jumping to 2.4. We have initial claims coming out as well. I always find the initial claims maybe only 1%. Quite possibly. No, you're right. I think it is a big jump. So let's see. I mean, it'd be interesting to see initial claims as well, because that's been quite a funny number. Because that's been pretty good. Because the previous was 214. Yeah, anticipation for the initial claims this time around is 220. So that'd be interesting. Anywho, we've got 8 seconds. 8 seconds to go. 8 seconds. Okay, right. Right. The euro's on the bit of a move. What is it? Bear with me. Oh, come on. Come on. Okay. It is. Oh, 2.6 actually, Eric. It came in at 2.6. 2.6. Initial claims came in lower as well. 2.6, 217 with initial claims versus the 220,000 expected. So that came in better as well. I know, man. That's strange numbers. Let's have a look and see where the dollar yen is on the back of that. Okay. Didn't care at the moment. Doesn't care. Euro as well, back above parity. Didn't care. All right. So anyway, we stayed for the extra event. I know, buddy. It does seem a bit like a big jump up. But anyway, that was not huge. But anyway, guys, ladies and gents, in the main event again now, in my opinion, like I said, I always thought this was the main thing, which will be happening again in about 15 minutes. Let's have a look at the euro again. Yeah, it's trading back above, trying to get just back above parity a bit, 1.00113. But the main event, I think, in my opinion, is happening in 14 minutes. And I'm not going to stay for that one because it's more difficult. I got to watch that as well. That's a press conference. It's not like watching data come out. So I think that's going to be the main thing for the euro today. It's going to be that. What she says. Will she say the R word? That's going to be the key. Anywho, there is no other questions. Eric, big shout out to you, buddy. Thank you so much for coming along. Thank you so much for your interaction. I really appreciate it. I really do. It's great to see you again, buddy. It really is. And thank you for every single one of you for coming along to watch this watch along today. Not the most exciting, I must admit. It's not the biggest mover either, but still, I'm glad you came and I'm glad I was able to share it with you. Anywho, till next time, don't forget, these little videos are, no, that's right. First things first, sorry. Thanks again. You're welcome, Eric, thank you. Anyway, till next time, like I always say, if you're watching me on Facebook and you like this little program, by all means, give us a follow. If you're watching me on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting and useful, give me one of these. It's nice to know that you like what I do. But anyway, till next time, don't forget, these little videos are for educational purposes only. And in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.